Hey folks, just wanted to discuss a trade idea today that a member sent through to me, which I thought was quite interesting and worthy of a quick discussion. So it's a broken wing butterfly on Amazon. So expiry is October 30. Now Amazon's reporting earnings on October 29. So the idea with this one would be to close it out before earnings, not take any earnings exposure. And the trade setup is buying the 29.10 put, selling two of the 29.40 puts, and buying one of the 29.60 puts. So you can see here, these two are 20 points apart and this one's 30 points apart. So that's how we get the broken wing butterfly structure. And it can generate income if Amazon stays above, um, I guess the break even down here is about a 9.5% drop. Let's just change that to the price and we'll just zoom in. So about 29.20, but that's at expiration. And as I said, we don't really want to hold this through earnings. But a lot of times with these tech names, as I've sort of discussed in the past, is they hold up pretty well in the run up to earnings because traders are expecting a positive result. So they're looking to buy into the stock before earnings. So we've got positive delta here. It's a pretty low delta exposure, delta of 1. So it's probably about zero point 0.5 actually. You can see delta dollars here, 1700. So equivalent to really only owning one share of Amazon. So it's pretty low risk initially. And the idea is that we want to just try and capture a little bit of time decay over the next week or so and then close this out sort of right before the earnings announcement. You can see we're generating the potential for about $130, $135 in income, and the risk on the downside is about 870. So let's just zoom back in. If I do just a quick calculation on the side here, 130 over 870, it's about a 14.94% return potential. But with this one, I'd really be happy to generate about a 5% return per contract. Um, and that's a pretty good return in sort of a week to 9 days. Now, what we don't want to have happen is Amazon dropping. The purple line here is the T plus zero line. I don't know why this has gone all squiggly these days with interactive brokers. It's a bit weird, but you can see if the stock drops, down to 3050, something like that, it's not going to be good for the trade. So I'd set a stop loss of about 10%. So risking 830, 10% of that, $83 per contract roughly. So 10% stop loss, 5% profit target, and close out before earnings. Just a reminder, not financial advice or trade advice, and do your own due diligence. But I thought this was an interesting example of a broken wing butterfly to take a look at. Hope you enjoyed the video, and I'll talk to you soon.